I'll be talking a little bit more about interest-only lending. There's no doubt that it makes sense to carry your investment debt on an interest-only basis so that you can concentrate on paying down your bad debt, your home loan, more quickly. A couple of years ago, this changed since investment lending has always now comes at a premium if you get it on an interest-only basis. But more recently, the difference between interest-only rates and principal and interest rates are converging because APRA's taken their pressure away. But I want to tell you what the big hoo-ha was. Until about 5 years ago, and all of us in the banking and finance sector are kind of guilty of this, we're going willy-nilly 5 years interest only, 10 years interest only to borrowers on the basis that it makes sense and they still have the ability to further make principal reductions if they want to on a variable rate. But we kind of, as an industry, failed to realise that after a 10-year interest only period, their loan is going to revert to the remaining 20-year term of the loan. So it will be even, the repayments will be even higher than if they took a 30-year loan term in the first place. So a lot of people who took out 5 years, 10 years interest-only lending, 5 years ago, are now going to come off that rate on the expectation that they can ring up their broker and say, oh, can you roll it over for another 5 years? Well, no, it's not like that. The way the banks calculate over the remaining term of the loan, once the interest-only period expires, has all changed. So a lot of people will come off these loans and have a very, their repayments will literally double by going interest-only and now going P&I over the remaining 15 or 20-year loan term. Repayments are going to be sky high, and we might see some stress in the property market with all these people rolling off interest-only loans. Just wanted to explain what the hoo-ha was about, because you do see newspaper articles talking about this influx of people who are going to fall into arrears because their mortgage repayment is going to double. Again, that's because they had a feeling in the olden days you could just roll over your interest-only period for another 5 years willy-nilly. I used to do it like 20 years ago. Now you can't. The bank will completely reassess everything and determine whether you have the capacity to service that loan over the remaining term. So if you buy a property now and you have a 30-year loan term and you want 5 years interest only, the calculation will be done on the remaining 25-year term of the loan. Westpac and St George didn't do that. Even if you got a 15-year loan term, they used to assess capacity over 30-year loan term. They got fined about $6 million for that about 3 years ago. So all the banks have wisened up now. This is why the banks are wanting to see loan statements for even your car leases to see when everything expires and make sure they capture all your liabilities to ensure that you have the capacity to service. There it is. That's my explanation of interest only and what the concern is in the market.